Hello there again. This is Damian Rhodes. Welcome to my channel on investing. If you like my channel, please subscribe. Hit the like button if you like the video. And if you have to leave a comment, please have some grace in all you do. No trolls welcome. I currently have a book out on Amazon.com called Cryptocurrencies for Beginners, a fast guide to get you started. I'm also working on another book that I'm going to post very soon called Learn the Rules of Investing or Others Will Rule You. Today's topic is going to be about Bitcoin crashing. I don't know if you've been paying attention, but Bitcoin had a horrible 10 or 11 hours and went down almost 15%. It took the whole market with it. Many people said Bitcoin was in a bubble. I was in agreement because everything ends. The trend always ends at some point. If you watched any of my other videos or read my books, you'd know that that's how I feel. And more often than not, we in this camp are correct. So let's get right to it. Bitcoin's price has brought down all the other coins along with it. This is the top 20 or 40 market cap coins. As you can see, every coin is in the red. So how do you deal with every coin being in the red? Probably everything you own being in the red. Well, unfortunately, it is what it is. If you had read any of my other books or watched my videos, you'd know about Fibonacci lines. Fibonacci lines basically are from an Italian professor who created the Fibonacci sequence. Someone very wise noticed a pattern forming in investments where the Fibonacci sequence works. And basically what it is a sequence where you draw a line from the bottom of a period to the top of a period, and you draw your Fibonacci sequence. And what it basically says is this: once an asset has rallied tremendously and started to sell off, in all likelihood the asset will hit one of these lines on the way down. It will sell off gain to one of these lines. No one knows why this works. No one knows how it came about. But the reality is this: hundreds of thousands of money managers, traders, investors use Fibonacci sequences in their tactics. So it's wise for you to learn what they are. I promise you, when Bitcoin hit 19,798, if you told someone in a month and a half that it would be 9,300, they would not believe you. They would ask you why you believe it. And then you try to go in and start telling them about Fibonacci charts. Their heads would spin. They don't want it to happen. They're going to ignore you. But the reality is they work. So as you can see, Bitcoin hit its 61% Fibonacci line at 9,300, rallied, hit resistance at its 38% line, and has sold off right back to the 61% line. If it holds from here, it should rally to the 50%, maybe even the 38% line. Traders will put sell orders in at those lines if they buy Bitcoin here. You, if you're a buy and hold investor, this is not an easy time for you. I understand how hard it is to sit on your hands when you're down 50%. It's why a lot of people are like me, where we just can't see a profit disappear, so we come in and we sell. But that's not the point of this. This is to try to get you to have your head wrapped around you, to get perspective on what's going on, to realize that it's normal. Excuse me. Here's one of the rules on Wall Street that we were taught very early on. It always happens again. It always happens again. People believe it won't happen again, yet it always happens again. A stock market crash occurred in 1987. People said it would never happen again until 2008, financial crisis, when it happened again. People watched the dot-com bubble occur, where people became instant millionaires and some of them became billionaires, and people said it would never happen again. until the housing bubble happened. And it happened again, where people made millions, some of them became billionaires. Number one rule, it always happens again. Don't believe your own thought process when you say to yourself, it can't happen again. It can. So, why is this occurring today? Well, there's a story out about India cracking down on Bitcoin, saying it's not real money. The reality is that this is what they've been saying all along. It just became news today, and because Bitcoin's been in a severe slump, every bit of news is magnified on the way down, which is normal also. One of the rules I want to teach you about when it comes to investing is this. You are at the most risk when it is the least apparent to you. When you are dancing around the room because you've made so much money, when you are already searching for a new house and you've already visited the Mercedes-Benz dealership to buy the brand new Mercedes-Benz you're going to buy with all of your gains, that is when you are at the most risk. And it's when you're not paying any attention at all because things are so great. Everyone around you believes in making money the same way you just did. They're all getting in, they're all buying in. Here's another rule. The masses are asses. When you're telling people what you're doing and 95 out of every 100 agree with you that that's what you should be doing, you have to step back and say, the masses are asses. They are never right. I need to start selling. They won't agree with you. When you go to those same 95 people and say, I'm selling, they won't agree with you. The masses are asses. But because in Wall Street, rules seem to have correlations on both the upside and the downside. Here's another great rule. It's pertaining to the first one. Remember, the first one is you are at the most risk when it is the least apparent. Conversely, you are at the least risk when it is the most apparent to you that you are at risk. When everything is so bad you can't believe it, how bad it is. When everything is down, when people are throwing in the towel, when people are saying it's over, it'll never come back. That is when you are at the least risk of coming in to buy the asset. You have very little downside, but 95% of the people, the masses, will not agree with what you say. They'll be telling you, I sold everything. I've gotten out of everything. I'm putting it all under my mattress. That's how you can tell when you are right. When the masses agree with you, you're wrong. When no one agrees with you, you are probably right. I'll take you to a stock. We've all heard of it. It's called Amazon.com. Remember that rule I said, it always happens again? Well, here's a perfect example. Amazon hit a low. Yahoo's chart only goes back to 1997. So we'll go from there just so the visual is easier. Amazon was $1.31 back in April of 1997. Okay? Amazon went on a huge run during the dot-com bubble, made Jeff Bezos a billionaire, and hit a high of $96.88 in October of 1999. 30 months. In 30 months, an investor made 7,300%. And then, of course, they were dancing around the room, going out and buying a Mercedes-Benz, blah, 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 and the bubble popped. At its low, Amazon went all the way down to $5.51. That is a 94% loss from the high. Somebody who bought, and there is somebody out there who bought Amazon at $96.88, lost 94% of their wealth in the following 2 years. We all know what happened in September of 2001. 9/11, stock market closed for 4 days. Wall Street was in a panic. So, go back to the rule. You are at the least risk when it is the most apparent to you that you're at risk. How much worse can it get than the World Trade Towers coming down? and the stock market's shutting down for 4 days. But if you went out and told 100 people, now is the time to buy, 95 of those people would not agree with you. And that is, again, how you know you are right. Anyone could have come in and bought at this level and understood that there is very little more downside risk. How much lower could Amazon go other than to zero? There is tremendous upside potential on an asset during a bloodbath. There are investors out there who will tell you, you buy when there's blood running in the streets. Bernard Baruch, one of the greatest investors of all time, said he knew he was making the right investment decision when he almost threw up making the decision. What did that mean? It meant it's so hard because nobody agrees with you. You can't tell anyone what you're doing because none of them will agree with you. So, what happened since September of 2001 on Amazon? It went up to $1,390. That is a 24,000% gain in 16 years. 1,500% per year. Per year. Yet, nobody bought it down here, except for the professional traders. Nobody. So, how does this pertain to the cryptocurrency market? It's the same thing. Bitcoin was in a bubble. Bitcoin has burst. It's hit its 61% Fibonacci line. In all likelihood, it can't get any worse than it is right now. So, if you're considering buying and coming into this market, you should be happy. You should be excited because everything is half price. Everything is cheaper. What would you rather do? Buy Ripple when it's $3.50 a coin, or buy Ripple when it's 95 cents? Which investor do you want to be? So, how do you handle a Bitcoin crash? If you're a holder, well, you've already made your commitment. You committed to holding. If you change your mind now and Bitcoin goes to 50,000, you're one of the persons who sold at the bottom so someone else could buy low. Remember this. If you come in and buy something low, someone else is selling it to you. You both cannot be right. One of you will be right and one will be wrong. You can't buy Amazon at $5 a share off some guy and go back to him 16 years later and say, we did a great job, didn't we? He will look at you like you have rocks in your head. He lost, you won. The same thing with cryptocurrencies. All investment classes act the same. It's just in cryptocurrencies, everything is accelerated. So you have to be thinking a little bit quicker. In all likelihood, if Bitcoin bounces off of this low, it will go to a 11,200 to 11,004 and then probably hit resistance and sell off a little bit from there. So if you're trading, you set your target at 11, and if you make your 20 or 23% gain, take your profit. You can never be wrong if you take some profit. I hope this helps you out. I hope it helps you handle this current situation. It's not the end of the world. Hang in there.